Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Wednesday, February 23rd. More of the same today. More selling and very little buyers. Even getting interested in this market. In terms of when I refer to the buyers and the sellers, what I'm referring to is those that really impact the market, the institutions, right? The institutional buyers and sellers. They're the ones that have to kind of commit a lot of money to kind of get this market to get going. I have not mentioned the risk disclaimer. Please make sure that you go ahead and read the whole risk disclaimer. Everything that we're talking about is for information purposes only. So look at this price action today. Woof. Q's down 2.5% for the day. SPY finished down 1.75%. IWM almost down 1.9%. But what made this particular, even more painful than those numbers, the one-day numbers, are was the move from the open to the close, because we actually started in the green today, right? The market was up a little bit in the overnight market. So again, you look at the percentage change from the open, 3.5%, and basically, straight down from that. So here's the 5-minute. This is the price action. Notice that we got a little bit of this this move. Again, notice what time this happens. It's something that I try to mention in the trading room whenever I can, is that sometimes you do get this little bit of a midday bounce or rally. Usually that happens when we're having a day like this, when it's right around lunchtime. Because there's not much volume usually that's going on then. This was a little bit earlier. I think this started off around like 11:30, and it didn't really make it too far into the 12 o'clock hour. Perhaps people just saw, whoever's doing the selling just said, hey, let me make sure I'm, getting back in there and selling. But, a couple of the characteristics that we see this types of price action is that after you have one of these bounces like this, and then as we're floating down, especially kind of at the end of the day, it's very difficult to kind of take back any of these moving averages. Many of the 5-minute bars too, if you're watching and just kind of observing, they will start green, and then by the time the bar is closed, that will go red. So that's just typical that you've got a lot of selling pressure in here. So, this is just becoming like a waiting game, in terms of this price action. If you're playing it on the short side, congratulations to you, because there's so many areas of the market that are just getting hit. And, I went around like 3 o'clock today. I went through and just was looking for sectors or something that looked a little bit different to me. And I was like, there's so many things that are on the lows of the day and just don't look very good. So on this daily chart of the S&P futures, is there anything that I'm fine? A couple of things to point out here is that we've been down, I think this is 4 days in a row, since this failure at the 200-day moving average. It's basically been straight down, right? And we did hold the bottom of value yesterday, but we're hearing about this market just can't handle this geopolitical stuff right now that's going on. And keep in mind that when there are these geopolitical type conflicts going on, that's the word I've been using, is conflict, is that there is usually some downside action. And that's what we're seeing. I've been putting out a table that was shared by Ryan Dietrich, talking about what the average move is when you see these escalations. And, we hadn't even really gotten there yet, the last couple of days. So, this is now playing out, and, let's hope that this kind of, washes out and hopefully goes quicker than lasts longer. But we'll see. What I'm looking for, and this could happen in the overnight market, the way that this market is moving, is this 41.77 virgin point of control being taken out, right? Notice what happened I was hoping that when we visited here the first time around, that this was going to be taken out. I just felt like those two virgin point of controls were too close together. Now, again, once we get back inside value, which we were, we opened up inside value for the month of February, you don't really have to worry about that virgin point of control. Just like if there was one up here too, only when you're trading below value. So that's why I think that this level gets taken out, and then we'll see if we can rebound from there. All right. Or at least bounce. That was something that I talked about in the TTG pre-market session And complete transparency. I said, hey, I think that we're due for a bounce soon. I think, and I'm not saying that the trend is going to change with a bounce, right? I mean, this looks ugly. And when I show you the weekly chart too, it looks ugly too. But I'm like, hey, some of these things are getting pretty washed out, right? And are due for a bounce. Eventually, you will see buyers come back in. I was reading Helene Meisler's column that she writes daily for Real Money, and she was saying that sometimes it's kind of a surprise when you see sellers really or it can be a surprise when sellers are this active, and it's the same thing when buyers come back in too. Right back in here, we saw buying going on. So at some point we will see that. And I agree with what she was saying. The market doesn't go straight down, doesn't go straight up. Sometimes there are heavy periods, right? Clearly we saw this from January 13th. We basically moved in a straight line for about a week or so. So we got the same thing going on. So that's what I'm watching on my charts is this 41.77 level. Again, I don't know if we stop there. It'll be kind of I'll be looking for something like this where we come in and we take it out, and then we might, have a foothold there. Also, I would be cognizant of this weekly chart too, right? So even if we do bounce, right, the 80% rule is in play. The 80% rule, if you're not familiar with it, when you're dealing with value areas, right, which this value area here for 2022 is based on the price, all the price and volume, and obviously the time of last year, right? And we put a value area based on the statistics that are involved here, and they give us some good support and resistance. So the 80% rule is when you start a period either above or below, and you establish yourself inside value. Again, you have to start outside the value area to start the period, which we did. And you establish yourself firmly in here. There is a 80% chance that you go from one side to the other, right? Again, it's not 100% chance, but it is there's a high probability, it's 80% that you go all the way through it, right? So that's a 40.75. So, if you want to kind of zoom in and say, where does that happen on here? It's probably somewhere in here. Right. Which again, the way that we're falling is not really that big of a deal at this point. And the way that some of these stocks that reported earnings after hours, just really ugly. So, this is also something different than what we've seen over the last couple of years. It looks like there's a lot of companies, not all, right? There's a lot of companies though that are slowing down, right? And that hasn't been the case now for a while. So, we're seeing that in some earnings reports. We're also seeing companies really being impacted by supply chain issues, something that we've been hearing about for a while, plus the inflation. And now you've got a geopolitical conflicts going on too. So that just creates a lot of issues in this market. The Fed, there's another Fed speaker today talking about how many times they want to raise interest rates. I mean, without giving you too much of my opinions, but these guys, there was plenty of time for them to raise interest rates, and all they've been doing is talking and talking and talking. By the time that this March meeting rolls around, these markets are going to be in such bad shape. So I never understood. You've heard me talk about this time and time again with the Fed speakers talking, just the action. You should be doing action instead of all this talk. I don't understand it, but in any event, we don't have to understand everything that we're dealing with in the market, but we do have to have a framework of how we're going to react around it. So, that's kind of the story. I could also talk a little bit about the Qs, but again, if you look at most stocks, we could certainly talk about some of the ones. But notice that there's a version point of control that was taken out here. So again, it could be an area for a bounce. You could see what happened the last time. I will give you an example. I try to give, I know that not everybody's familiar with this concept, right, of the value areas and version point of controls, but you could see, for example, how well that this has been, when you even when I show you a smaller, a shorter time frame, which is in the 1 hour, notice how significant this is, right? We could not break into value. Certainly I showed you that in the S&P chart last week, talking about and here that we could not get out of that short-term downtrend, right? We tried many times last week, couldn't do it. We actually tried on Monday too, right, where the market was closed, right, and that was a failure too. And we continue to kind of, if you don't have the value areas on your screens, you could use it also just to see the short-term trend, the 200 period moving average, and you could see that this was short-lived. Once we broke this, it's on the way down. All right, I wanted to show you something that I talked about like a week ago with Upstart. And this has been the case too with a lot of names that are reporting earnings right now. A pop on earnings and then absolutely no follow through, right? And I talked about this. I sent this chart out. I'll probably send it out tonight too. But here was your Virgin's point of control takeout, right? So just like this, and this is what we want to see to the downside. But we'll see this market. We don't know when the sellers are going to be done. Here was the Virgin point of control takeout. There was also one that was lingering on the 1 hour. So the 1 hour one was also taken out, right? And you have a complete reversal off of that, right? So that's why these Virgin point of controls are so important, especially names that are in downtrends like the Upstart is, right? They're dealing with so much overhead supply, and the Virgin point of controls give you a sense where there was a lot of volume and what's known as, people call them dead bodies, right? Where people have been underwater in this name and just looking for any pop to sell, right? And that's what you have in some of these names that are in downtrends. That's also why I don't trade a lot of things that are in downtrends. They're much difficult, right? Obviously our indicator helps to tell you where this is, but you're dealing with you're trying to time a pop, and then you've got to get out of it right away, like very quickly when you're dealing with names that are in downtrends, right? Just a couple other things too, just to kind of hammer home why I don't mess with names that are in downtrends. Skills, right? And there's so many of these examples, but again, like buying a name because you think that there's a high short interest, right? I heard that somebody told me that on Twitter a couple of weeks ago. They're like, well, I'm not selling it because it has a high short interest. That should have absolutely nothing to do with your decision making, right? High short interest is great when there's a catalyst, a positive catalyst, right? And there's a high short interest, means sometimes the shorts have to cover, right? But but a lot of times the shorts are correct. So please, and again, I'm not giving out any advice or recommendations, of course, but please do not buy a name because it has a high short interest, right? If there's some type of a catalyst, you could look at that for earnings and you could say, hey, if this company does something positive, maybe it will force the shorts to cover, right? You could think about that scenario to play out, but please do not buy a name because it has a high short interest. That was one of the worst things that I've seen communicated to younger traders over the last couple of years who got involved, who were just looking for names that had high short interest. That's not that's not good trading. So in any event, like another name that reported, Fubo, right? Another name that I've never really been interested in. But again, like look at this thing, right? 760, and I think it's down pre-market. It's down to 733. But why bother? Even if you buy this thing, you're going to be met with sellers above, right? You got to wait till these things. And again, I'm not interested in this name at all, but you got to wait until these names kind of get back into their uptrend, so they're not going to be fighting with overhead sellers. So some things that I did today, I was definitely wrong on a couple things. I mentioned that, I was looking for this market to kind of rebound a little bit today. That's not what we got. In terms of that. So, Salesforce, I looked at Salesforce yesterday and I thought, hey, this thing's probably due for a bounce. Well, maybe it's just not ready for that. And again, it's tough to kind of do that, but here was your first minute bar. And then, a move right off the first 5 minute bar, right? And that's when I bailed on it. Yeah, 940 and then right then. Some other things that are working for me is we talked about the vaccine names, right? That I thought were all shorts. Novavax was down 7% today. They all look very similar. I thought this one looked the best. I think it has more to go to the downside, you know, digestion here, and I think also the case with BioNTech. Moderna reports, I think, tomorrow morning. So, you know, I think on a pop, I would be interested in shorting that one. Some other names that were some bright spots, AbbVie, you know, just continues to look pretty well. You know, why is this name doing this? Right. Well, it's cheap. You know, and I guess they've got some catalysts on. To tell you the truth, I don't know half the time, you know, especially for a pharma name. Why is this outperforming and doing so well? Right. I do think my opinion is it's cheap, but sometimes you don't have to know the reason. Right. You just need to know where you're going to sell it. Right. If it doesn't work, you know, and that's the 20-day moving average for me. But yeah, what a nice performer that one. A couple other things, you know, I did a couple scalping trades, but very quick when I'm in the scalping trades. SARK, I mean, this is crazy with, I put this on in the TTG trend portfolio, but talk about a good looking breakout, right? And what's crazy, I mean, the performance of this down 35% year to date. I put this on 3 days ago in the TTG trend portfolio, just 3 days ago, and it's down 10% 3 days. So in any event, I'll leave it there, guys. You know, but again, the name of the game right now, you know, is just patience, right? And, you know, if you get involved in names and it doesn't work out, like I was showing you with the Salesforce, you know, you just back out of it, right? And just realize you got a little bit of a you know, a paper cut for the day, right? But it's not a place to really, for me anyway, to think that this market is going to rebound. And you know, we're almost through February. You know, let's see how much further this goes. I'm not going to try to predict it, but when it does, I want to be ready, you know, ready to go and not be bogged down, you know, by, you know, the frustration right now in this market. That's the goal right now. All right, guys, have a great night. See you tomorrow.